What's up? My name is Greg, and you just found yourself at Weenie Trades. Welcome to this video, and in this video, I'm going to be going over the S&P 500, a SPY analysis, and then I want to show you a very highly profitable swing trade setup that I used today. And I'm not trying to sell any systems or swing trading strategies. No strategy works all the time. I just want to share with the one that I made money on today, and it's a replicatable pattern that's worked really well for me in the past. Then I'm going to be going over a quick day trading recap, and then we'll see you guys tomorrow. So first up we got is the S&P. SPY, pretty interesting day. A first day slow controlled sell-off into a pop into the afternoon. So we kind of had a little bit of a wedge pattern. And a wedge really just is we're making lower highs and lower lows, but the bears aren't getting a lot of follow through. So there's not a lot of dropping to the downside. Boom, once we start to break out of that wedge pattern on an increase in volume, that shows commitment to the buyers, and I was able to trade long setups into the end of the day. So a really nice move on the S&P thus far. And if we look at the 4-hour time frame, I was saying, hey, this golden fib is actually a really important level. I don't use Fibonacci too much, but whenever there's a big stretched move like the S&P has had in the last 2 weeks or so, you can really draw the fibs from the low to the high. And I have mine marked as golden, the 38.2. If you come into that level and buy that as a dip, you can actually expect continuation. So the question is, the golden fib has held. Can we expect continuation on the SPY? Maybe. I do think first, the price is likely to go sideways to slightly higher over the next day or week or even month, but I don't expect it to go much higher than that 460 level. So I'm expecting just a lot of muck, a lot of resistance. Call it, yeah, maybe SPY runs into resistance short term at first, 453. That's 453 is R1. R2 is going to be 456. And then R3 is going to be for that 460. So that's kind of the bullish scenario. Of course, if we eclipse today's lows, we could be coming down and testing something like this 50% retracement of 437.83. So that's my brief S&P analysis. But if we actually go into specific sectors of the S&P, check out the healthcare sector. New all-time highs today. And I actually spend a lot of time analyzing the different sectors of the S&P. And healthcare was one of the stronger names. Healthcare will be on the left, S&P is on the right. Notice how there's actually relative strength from healthcare. Healthcare pulls back and just barely goes sideways, while the S&P is actually selling off. Healthcare is actually making new highs. And this is actually my favorite swing trading type of setup. This is my best and most profitable setup. Here it is. Check it out. My most profitable pattern, and I did it on an example through AMD. So check that out. But on XLV, the options chain was actually not implying that big of a move. If we actually look at some of the options that expired this week, something like the 137.50 strike call, it was not expecting that big of a move. So look, it was not priced that efficiently. This contract was $63, and just 2 days later, contract makes a high of $360. That's absolutely insane. See, people are always interested in penny stocks all the time, and I'm like, just find like a good deal on the option chain and trade some of these boring sectors. Nobody thinks about healthcare. It's not sexy, but 452% in 2 days is kind of sexy if you realize that it is sexy and it's there. So either way, XLV started to accumulate as we started to hold and have relative strength. So started to buy a little bit on that day, bought a little bit. I actually thought it was going to break out. Now my stop loss was just underneath 136. So I'm really buying XLV at about 137.50, and I'm layering up different call options, put credit spreads, boom, add again. And then today was just take profit day. Take profit, take profit, take profit, and just holding my last quarter of the position. So really nice move on XLV. And it's my favorite setup because we have a high, we have all-time highs. We're coiled in a bullish flaggish pattern. So this is a bull flag. These generally resume to the upside. It's relatively strong. And look, I can just duplicate this flag, duplicate drawing, and that usually just about gives your measured target to the upside. So maybe XLV has another 70 to 80 cents in it. Maybe it goes a little bit further since all-time highs tends to continue to make all-time highs. So keep an eye out for implied volatility deals. So make sure the IV is low, because when you're in a coiled range, that tightens up that implied volatility. And if you can buy the calls just before the breakout, gosh, that is just money. If you can find those setups and trade them well, you can make a good living trading. The thing is, though, is that this setup doesn't occur all the time. Not every stock or ETF is sitting in front of all-time highs in a coiled up pattern such as XLV, but very thankful to capitalize on something like XLV today. Now I'm going to go into a brief day trading recap. It was actually a really good day trading day. It felt like everything I touched just turned to gold, which was very nice. You know, it's very nice to just have the setups work. And, you know, I talk about these patterns and show these patterns and these setups all the time, but it's one thing to analyze it, but it's another thing to trade it. Trading it is a lot more difficult than just analyzing a pattern. There's emotions, there's execution, there's position size, you name it. But anyways, our first trade of the day was on NEO. And if you're watching pre-market at Weenie Trades Live, go watch me trade live at Weenie Trades Live. It's a lot of fun there. I'm saying NEO is bearish on the day, and it looks more bearish underneath 2120 and underneath 21. So I'm setting alerts on NEO, and look at this beautiful setup. This is an opening range breakdown. So we've established an opening range. Here's our lows down here, and here's our highs up here. Okay, we've established our range. As we start to break down, I go ahead and buy a put on NEO. Stop loss can be tight above this little pivot, or if you want to give it a little bit more space, you can put it above the high of the day. And it started to flush. I was like, yeah, I want a little bit more size on NEO. NEO's not that big of a stock, and if you're just buying one put, yeah, it's probably not going to give you the leverage or trade risk parameters that you're looking for. So we get the flush, and as we start to backtest, sometimes the backtest is the best spot to be adding back in. So critical day trading tip right there. If you missed it on the way out, you can catch it on the way back in. So this is on the way out, NEO, short, drop, kick back. As we start to pull back just a little bit, boom, buy another put. And then we get the nice good new lows and flush and just TP NEO. Could have sat in it a little bit longer as it did make a nice new low down to 1973. But nonetheless, a beautiful trade on NEO and shorting the breakdown, adding on the back test, and then covering into the lows. So that was NEO today. Target, very interesting move on Target today. The options on Target. Today, I was looking at the 222.50 strike call. And my goodness, the 222.50 strike call, $100 just consolidates, and then boom, massive breakout in implied volatility. This is what we're looking for as options traders, especially if you're going to be buying them. You want to buy when the implied volatility is low and nobody's expecting a big move or a breakout, and then boom, you just get like a 1,500% move towards the upside. $100 into $728 on Target. Now, I didn't trade this one perfectly. I didn't like how I was trading in the morning. I took this initial flag break. So you buy the bull flag, you just buy right there. Stop loss can go underneath the low of the day. We make a high, and I just thought, yeah, Target's not as strong as I thought. We got a higher high, and as we started to curl over, I just TP'd for a very small win. But either way, the move was actually on the equilibrium. High, low, lower high, higher low, bull break. Not a lot of volume, so that's the tricky part. But volume picked up as the trend continued, and Target was able to squeeze. And always just double check the daily. On the daily, a nice good EQ as well. So that helps with extra explosion. Just like XLV, I don't want to be just looking at the 1 minute time frame. I want to look at the higher time frame to see how far it can go. How much room does it have to run? So high, low, lower high, higher low, lower high, lower low. Still an EQ though. Overall lower highs, overall higher lows. And today we got the breakout, and look at the volume. So can Target chug a lug on higher and test something like this 240 level? That might be in store for Target for the month of April. Lastly, I've been getting some good revenge on Tesla. So Tesla, I don't know if you've been following Weenie Trades for a while. I was very patient. First took the long trade from about 900 all the way up to 1,000. So that was a good long trade. But then I thought it was getting a little bit extended, and I started to short Tesla at about 1,015. Well, as you know, Tesla exploded and gapped up off of that stock split news and basically had to take a fat L. And then I tried one more time in this consolidation. Boom, we get a breakout, took a fat L. However, Tesla's dropped quite a bit in the last 2 days. It's dropped 10.5% in just 2 days, and I've been able to capitalize very well off of it. Either way, I'm not green on Tesla for 2022. I am just significantly less red. So basically selling up here, sell, and then you buy down there, and then that's your profit. Nice good move on Tesla. Today, we had a nice good push higher, a little flag, a little pop, And actually, this was a rollover formation. And it depends on how quickly you can catch it. But either way, nice good flag right here. We break that flag up, right? Now we start to roll on over. And this is actually a short setup right over here at about 1061. I did not catch that short setup. Just wasn't paying attention. Also, it's just a nice good green day. Can't trade everything, right? But either way, we started to drop to a new low of the day. Now, whenever you drop to a new low of the day, the odds favor that the trend continues sideways to slightly lower for the rest of the day. So knowing that in my head, I see this bounce and I'm like, well, I've got a great risk to reward. This is an H pattern setup and I can sell right there. So sell at about 1055 and put my stop loss just above 1057. 1057. No need to risk a lot. Boom, we flush and get into a new low of the day. Boom. Nice good TP on Tesla. Now this is a little bit crazy because the next day options contracts are extremely volatile. Look at the put that I traded, the 1005 strike put. Absolutely insane. And look, just going long right there. Boom. Get a nice good push up, TP, as the contracts inflate. But look, this contract was basically at $1. $100 turned into $900 just on that drop today on Tesla. So these option contracts are very powerful if you can find when there's about to be that burst of implied volatility. We're not just trading stocks here. We're trading the way the stock moves and trading the implied volatility. It's crucial in options land to understand that. So that's all I have for the day trading. That's all I have for my favorite swing trade setup. Very highly profitable, the XLV. Give yourself some time. Don't just go with the weeklies. Give yourself like a month in time and you're going to be able to capitalize very well on some of these setups. So keep on improving. You know, join Backpack Trader. Check out Backpack Trader. I'll link that in the description. Check out their YouTube channel. They are my mentors and they've been in the business for a very long time. Very experienced traders. You're going to learn great macro analysis from them over here at Backpack Trader. And I'm just excited to see what the future holds for both our channels. It should be a lot of fun. Keep getting better. Keep improving. Focus on your goals each and every day. Bye, Parker. Parker says goodbye. Thanks for tuning in. See ya.